Good morning, guys. Welcome back into our second session of the week. Special session. YouTube viewers are joining. Big hello to YouTube viewers. And this is the weekly market outlook, guys. So nice to start the week with a little bit of idea what's important, what might be waiting for us during the week. So potential headlines, macro readings that might be moving the market. Of course, weekend brings some news, sometimes more important, sometimes less important. So usually where I start the week, I look at major markets and see if we have some gaps. And why do we have those gaps? And if the sentiment is creeping in from the weekend is a positive or negative, or maybe short-term negative or positive, and eventually subject for change. So let's check it out, the mother of all indices. What do we have today? Asian session slightly and then gradual decline, no interest whatsoever. But this is not a huge panic selling. It's more like a technical pullback from the end of the last week. So let's say maybe nothing much have changed. What was the news, guys, for the weekend? We finished the week with the news that possible US-China deal is not that easy to achieve. The deal that was moving the market since 12th of May, actually the possibility of a deal, right? So we got again, a weekend, the 9th, 11th of May, and the Monday opening prices, 12th of May. We got a gap and prices were nicely smoothly going higher for the US equities. And that was 12th of May. If you remember that, that was a big news that China is talking to US, and then probably the tariffs, which were set at 145%, would go down 10%. At least we got 90-day suspension of those tariffs, US-China. Not talking about the 90-day suspension of tariffs regarding other countries, which we got a long time ago, 9th of April, but this was regarding China, and China is a big trading partner with US, so that was important. But at the end of the last week, guys, we got some decline. This was Friday. And again, mood was sour because of potential problems with that deal. So Trump started to blame. Let me see if I have the headline from last week. Trump, this is about the court ruling from last week. This not is not this. Oh, just to have a perspective, guys. Look, trade between the U.S. and EU is massive. We got also some news last week about the EU possible 50% tariffs, and China is also in the top four here: EU, Mexico, Canada, China, Japan. That's why it's important. Oh, look, Vietnam is even at the very top here as a trading partner. So what's the mood today? Nothing much changed from the end of last week. Expecting probably good news from US-China, as we already saw sour mood on those deals. So maybe now Trump would start to bring the good headlines when it comes to US-China. So there's also a risk going short on this market. I'm still long on this S&P market, seeing that the move that we got after the weekend is really not too aggressive. This is not aggressive selling, panic selling. Rohael is here. I can learn trading with in our language. How to learn? Can you be more specific, Rohael? With in our language. What do you really mean by that? All right. So mother of all indices, slightly down. Major market mover for the weekend was the negotiations with US China are not going that smoothly, but we know, and market already knows that Trump likes to play it hard first and then soften the game, and the ball comes back into play, and we are seeing rebounds. So market is not that, I'd say, dummy to sell off immediately just to hear later on that actually nothing happened and things are good. This was happening at least 4 times in the recent short-term history since April. So US 500 fractionally lower. In terms of percentage, after Friday closing, it's 0.4%. Really, it's not a big move. But also gold in a negative correlation, opening up higher on gold, 3,300 and moving nicely, almost $50 up. So we continue this possibility of gold breaking this huge bull flag that we saw being resisted last week. Now trying to break it again, but this is Asia session, guys, so let's not be surprised if ahead of the US session we have some of reversal. Probably we're talking about the buy the dip at the technical levels 3325. Possibly also selling into the major resistance at 3365, which is just $18 away. Volatilities on gold remain high. Going back into beginning of the year, January, February, March, you can see the volatilities as measured by ATR were around 25, 30, $35. Starting Liberation Day, April the 2nd, the major announcement of tariffs, we got though this volatility in gold. As you see right now, it's $80, roughly, with many days above $100. You have to take into account in taking your risk. Right now, it's $60. So from the bottom of the Asian session right here, it's already $60 volatile. Actually, it's up from the Asian session, $60 from more than $60 from Friday. So gold doesn't surprise here. Bad news for equities might be good news for gold, and that's what's happening. We don't have a smooth deal US-China. S&P is under slight pressure, 0.4% up, and gold is 1.5% up. So S&P is down and gold is up. And really, in the short term, we can talk about some kind of a negative correlation. Gold and S&P, let's check it out. Gold. It's not perfect, obviously. Let's look at gold narrative. Okay, gold prices rose over 1% on Monday as investors sought the safe haven asset amid new tariff threats from Trump and an escalation of the Russia-Ukraine war. Trump said on Friday he will double existing tariffs on steel and aluminum imports from 25 to 50% effective June 4th. All right, so this is a piece of news that I didn't mention. The announcement comes amid an ongoing legal battle over the legality of some of Trump's tariff policies, which an appeals court has allowed to continue after the Court of International Trade ordered the administration to hold the taxes. Trump accused China of violating a tariff truce. This was the major news last week. So souring the mood on the potential US and China deal. China being accused of violating a tariff truce reached earlier in May. And Beijing kind of refuted that and countered its accusation of US wrongdoing. And then you got a Ukrainian drone that has destroyed over 40 Russian planes within Russian territory. And Moscow pounded Ukraine with missiles and drones just one day before the two sides meet for a new round of direct talks in Istanbul. And you remember that we supposedly to have a fast peace. One day, it's supposed to take one day, as Trump indicated, but the Russia-Ukraine still continues on the battle. And on top of that, I remember Trump mentioned that he would come into agreement with Putin. But recently, there was some biting on each other. Trump said Putin shouldn't play with the fire, and then Putin responded that he would do whatever he wanted. And those are also the events that are bringing a little bit of attractiveness of safe havens, like you see in this narrative. Sorry, the gold. And now let's check this correlation gold and S&P for the recent short term, knowing that negative geopolitical developments are not favoring stocks. They might be favoring gold. That's why this negative correlation might be valid. And tariffs as well. Negative developments in tariffs realm, they bring positive gold movement and negative S&P. So let's check just at 1 month right here. Gold being in green. And you see right here from 12th of May, when we got a possible deal, China, US on tariffs, we got gold consistently going down and S&P consistently going up. And it's pretty much visible on this part of the chart, right? This was on the major announcement on tariffs, 12th of May, when tariffs supposed to go back from 445% to 10% respect to US, China. Later, we got a period of a little bit of less correlation, less negative correlation, but still, it was some kind of a negative correlation. We see that S&P was recovering and gold was going down. And then as gold was, actually gold was going up and S&P was down. Then we got S&P recovering, gold was down. And right now, gold is up and S&P fractional lower. So we can talk about some negative correlation, right? Just can take this into account when you have positions. So let's say if you have a long S&P and short gold, if major event, surprising event relating to tariffs comes in, then probably you'll be winner on positive development comes in tariffs. You'll be probably gaining on two positions, long S&P and short gold. Probably because this correlation is not 100%, but with nice degree of probability, right? So S&P and gold and other markets. Okay, U.S. indices generally are positively correlated recently. Look, this is U.S. 100. For last 3 weeks, we are not going anywhere. 12th of May, there was this positive development, and U.S. 100 continue going up on U.S.-China tariffs, possible positive resolve. U.S. 100 and U.S. 500 on daily is also kind of flat for 3 weeks. Couldn't continue significantly to the upside. So we started new week with a relatively flat basis, not in a panic mode selling, very cautious about buying the market. So generally, we talk about consolidative market, consolidation within the upward trend, short-term upward trend at least. So S&P and other indices are rather stable. And on negative tariffs news, looks like euro is back into 114. Still, this looks like a flat market, right? When you take into account last 3 weeks, similar to S&P, it's up, down, but actually prices didn't change much. Main idea for Euro USD was buy the dip, buy the dip, and buy the dip. Usually not shorting this market. Same idea we saw on GBP USD, and see the GBP USD consistently managed to make the new highs. This is an upward trend going on. New highs over here, consolidation again, new highs breaking this 135, and now again above 135, and you see positive momentum to the upside. Did I manage to get into GBP USD? I think yes. I was buying that dip, and I didn't rebuy the dip. But again, the strategy was buy the dip. So Euro USD, very similar. Euro USD and pound, buy the dip, sell, buy the dip. And now I also buy the dip and lose momentum to the upside. So holding Euro USD probably into 115 region or 114.76. This was the recent high, 115.40. I think that was the high, but you really don't need to go there. If you go 114.76 today, that will be already pretty nice range. It's already 78 pips. You see here the daily volatility is close to the average. So let's say if you go in average 20 or 30 pips to the upside, you're going to be like 14.45, and probably the upside potential will be exhausted. So that's for the general strength of dollar, because as you know, the US dollar index, which is a composite average of some 7 currencies, including USD, US dollar, Japanese yen, GBP USD, it goes the opposite direction in euro. So let's check the US dollar index. And if you are bullish on euro, you cannot be bullish on the US dollar index. You have to be bearish on the US dollar index, because the US dollar index is a reflection of that, what's happening in Eurozone. I mean, euro currency. So let's check it out. US dollar index as the X. This is CFD on a future contract, which is subject for expiration.